The National Party continues to have worries about the Inland Revenue's research into the tax paid by the country's wealthiest people. I'm joined by National's Revenue spokesperson Andrew Bailey. We had Inland Revenue in at the Select Committee this week and you were asking them about that particular research. What's your worry about them kind of questioning the wealthiest people about their income and the tax they pay?
Hey, well, first thing is we're happy for the Inland Revenue to make sure that everyone pays their fair share of tax, and whether it's a company or an individual, whatever. But it's pretty clear that the IRD was set upon this task by David Parker, and it is targeting very few people, and it's a very intrusive process. And it looks like it's just going on a deep dive. Some of the information that they're requesting is way beyond what you would normally expect, and it seems like that David Parker wants to undertake this type of review, clearly with the view that he will impose a higher rate of tax or different types of tax, and obviously they've now ruled out capital gains tax, but it's also clear that the trust tax rate will move up under Labor if they win the election next year.
Because they seem to be trying to look at income other than, the income that you earn from work. That they seem to be suggesting that wealthy people are getting a whole lot of income that is untaxed. Do you think that is the case?
Well, I don't know, but the IRD have a lot of access to different sources of information, and we've given them, and when I say we, the government, Parliament has given the authority, the IRD, to get information from a whole stack of different government agencies. What this review about is a deeply intrusive review of very detailed personal information, and that's going beyond just looking to see whether there are elements of mitigating tax. You can put in place tax strategies to reduce your tax, but of course you can't be evading tax. But the nature of the information that the IRD has been asking is incredibly intrusive.
At the Select Committee, the IRD seemed to be arguing it was a matter of trying to that the tax system depends on people believing that it's fair. And if, for instance, they found that very wealthy people were getting income that wasn't being taxed for whatever reason, would there be an argument, therefore, to try and tax that income to treat all taxpayers fairly?
If the review finds that wealthier people have been evading tax, then that's the issue. But
what if it finds that just under the current system there is income that for whatever reason isn't taxed?
Well, then if it's legitimate under the current tax rules, then that's appropriate. People can put in place policies or practices, whatever, to minimise their tax. You would be doing it at a personal level, as I would be doing it. So there's a big difference between looking at illegal activity and looking at current legitimate activity, and that's a big difference.
But David Parker, I think he agrees with you there, but he seems to, from earlier comments he's made, is wondering whether wealthy people just have more opportunities to legally avoid tax on a whole lot of income that most other people might be paying tax on.
Well, there's no doubt that wealthier people can pay for professional services to help them, but I keep making the same point. If something's legitimate, then that's okay to minimise tax. If it's leading to people evading tax, it's a totally different thing. And I think the more substantive question for New Zealand actually is the hidden economy. There's estimates that between maybe 10 billion, I've seen differing ranges of tax that is not currently captured, often by cashies, the good old cashie. Obviously that's reducing in potential now with cashless society, but that's probably the bigger issue. But David Parker hates wealthy people, and he certainly hates trusts, and in one of the Select Committees implied, when he wasn't thinking properly, that was a public forum, made it quite clear that it's quite likely that the trust tax rate will go up. And that now, so if you're talking about wealthier people using trusts, business, personal way to minimise tax, that option is available to everyone at the moment.
And Your colleague Simon Watts asked at the Select Committee about whether this was just a vehicle for the Labor Party to get some information and policy work done to put up a policy for the election campaign, and whether that was appropriate. I mean, do you share those concerns?
Well, I do, because if the minister is using the IRD with a specific purpose of targeting wealthy people, and particularly company trusts, which he's clearly indicated in the public domain that he is, then using the IRD to help further Labor policies is a major concern. The IRD should be the most professional, independent organisation. It's not there for the whim of one particular minister. And as I say to you, probably the much more substantive issue for New Zealand is whether, in fact, we're capturing all the tax across all the different mechanisms, and if that estimate of $10 billion of tax that is not currently being captured, that's probably a much more substantial issue that we should be looking at, and that would be an area of where you might send the IRD, because after all, they've got limited resources.
So, if you're in government, would National get work done in that area then?
Yeah, it's an area, certainly I've got a personal interest, because I think making sure that all New Zealanders pay their fair share of tax under the current legitimate means, and that's my earlier point, we need to make sure that everyone is paying their fair share, and if people are not, then that is what we should be going. And what I'm talking about is people evading tax evasion.
What about company tax? Because that came up earlier with IRD. They've done this thinking around, the company tax rate, and I think put in their submission talking about how it's one of the highest in the OECD, but also raises other issues. I mean, is that an area where National might look to make a cut in the rate?
Oh, look, our primary focus at the moment is that we are worried about middle New Zealanders who, as a result of inflation, are now paying a lot more tax than they ought to, and what they were previously paying, particularly as we've now had rapid inflation. So, it's a technical term is fiscal drag, but what it means is that the government now is capturing about 51 billion extra in tax revenue, not because it's smart or whatever, it's just the fact that through inflation over the last 5 years, the government tax coffers have just swollen because people are paying more tax as a result of inflation and people moving into higher tax brackets. And that's unfair, and that's why we want to see people getting money back in their pockets so New Zealanders can maintain the standard of the living that they ought to. At the moment, they're paying more in tax than they should be.
Some of those middle New Zealanders are probably doing cash jobs too, aren't they?
Well, I don't know. Traditionally there's different types of industries that are highlighted in that. But the main thing is this is wage and salary earners, because they're the ones who've been paying tax at higher rates. And that's why we're, with the cost of living crisis that we've got now, we just want to make sure ordinary New Zealanders, everyone has the opportunity to benefit from not having to pay as much tax as they should be or have been over the last few years.
Andrew Bailey, thank you for your time.
Thank you very much.